What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, marks the triumphant return of Zach's Live Trader. I feel like a new boy. We started this in, I want to say we launched a premium channel, I think it was October of last year. And why did we do it? Well, we did it to see, really just to mess around with these live events. That's how it started. It's kind of like almost a dare. I don't want to call it a dare, but maybe it was a dare. Where, you know, some of the people over at Zach's had an idea, like, hey, let's do some live stuff. So being the adventurous soul that I am, I'm like, sure, why not? Let's go ahead and kick it off and do some live stuff. So we started doing them a little bit. And then we started thinking, hey, maybe, you know, people really like this, so we can add sort of a premium layer to this. And so we started doing that. And as you know, over at Zach's, we do the text-based, email-based trading services. And I thought the natural progression, while everything's going towards video, is to do something sort of more video-related. So we started doing it, charging $10 or whatever, right? So it was nominal. Wasn't really making or breaking anyone, but it was kind of just a proof of concept sort of thing. So here we are. It's basically been a year. We've got a very healthy subscriber base now, and what do I do? What do I do with that healthy subscriber base? Well, I decided forget it. Let's just give it away for free. So from here on out, my friends, Zach's Live Trader is free. That's right. It's all free. So if you're not already signed up with us, you know, just subscribe. You got the subscribe button, and you can do it without fear. Without fear of being charged $10 a month now for Live Trader. So that's good. We've also got the chat running. So that's this discord.gg/pbwcmsg. Really goofy, right? But that is a link that you could use to hook up on our Discord channel, where we are most of the time. Now, we're not, with this new sort of iteration of Live Trader, you're going to see different stuff from me. Basically, the chains have come off. Not like anybody had chains on me to begin with, but there's just somewhat of an idea that people had that I should do this the way I should do it, and now I do what I want. So that's what I'm going to do. And so like tomorrow, we're going to set up something with the Fed. You know, how should you be trading ahead of the Fed? How you should be positioning money ahead of the Fed. So that's what we're going to do here, guys. We're gonna open it up, do whatever the heck we want. Today, that's going to include Adobe. And again, guys, still shoot those suggestions over livetrader@zax.com for stuff that you want to talk about. Or at all times, man, in the chat, feel free. Chip in, participate, hang out with us. You're going to see Live Trader, I think, a lot more on zax.com now that it's free. Just sort of as an added benefit that all of our users can take advantage of. So, still trying to figure out how to integrate it more fully into our whole ZU offering. But either way you slice it, you got me here. Okay, so I guess that's all my little diatribe. We would have got to this earlier, but the hurricane. I was in Chicago when Hurricane Irma hit here in South Florida, so there was no reason to come back, just to pack up and drive away. We're in the evacuation zone here in Sunny Isles Beach. Plus, I couldn't get back here. It wasn't until last Tuesday at noon, that the bridges were open, so I could even come back home. So got here Wednesday night, and here we are. So I did it as quick as I could, and there we go. So we're back. All right. Now, what are we back with here? We're back with Adobe, ticker ADBE. So, as always, I don't know why this isn't filling in, but whatever. I can assure you that this was good. Some kind of data-related thing happening to us right now. But the black line corresponds to the right y-axis, which is price. The green arrows are earnings beats. The red arrows, there are none. But those would-be earnings misses, don't have any here. The multicolored lines represent the evolution of our Zach's consensus estimates over time and correspond to the left y-axis. So you can see on Adobe, save for a little bit of a herky-jerk right here. Nice solid growth, continuing up year over year. Now, why is this happening? Well, you know, Adobe's Creative Cloud, so that includes, you know, Photoshop, Illustrator, After Effects, all those sorts of things. They've changed it. So similar to Microsoft now, you buy Microsoft Office, it's like $6 a month or whatever it is, $10 a month. They've got a subscription-based model for their creative services. So depending on how much you use, you pay. I think $30 a month, you can get a pretty nice suite. So they're starting to see this nice subscriber growth here. Very sticky money, solid stuff going on over at Adobe, and lots of beats. But what you got to ask yourself is, this is stock that was like 108 at the start of the year, close to 160 now, right? Did it warrant a 50% rise in the price? Now, as far as the growth goes, it's still there. And it's been easy to predict and steadily climbing. So again, the only thing you get into is one of these questions of, well, has it gone too far too fast? But that's a good question to have to ask yourself. Let's take a look at the detailed estimates page here on Zacks.com. Now, a little bit surprising, this is a Zacks rank number 4 sell right now. And we'll see why in a little bit. Now, they're going to report after the bell today, so we had to kind of cram this in a little bit. Sorry for that. You know I like to give you a whole day ahead of time. But now today, now that this is all opened up, maybe that'll fix some of the problems. Because before, you know, it was locked for some people, and I had to reload it for other people and all sorts of things. So anyway, now everybody can see it at the same time after the close mañana. And again, we're going to do something earlier tomorrow. Now, I do have to give you a quick little update to that, a little bit of a warning. I originally sent out that we are going to do it at 11, but I think we're going to have to do it at 10 because I might have a meeting at 11. I'm going to double check with the boss man, but I think we have a meeting at 11, so I'm going to either have to do it at 10 or noon. I don't want to do it at noon because the actual event is at like 1, so I think I'd rather do it at 10. Anyway, so there's my little aside. Solid revenue growth here for Adobe still. Almost 24% for the current quarter. Next quarter looks like 20.4. Current year number rounds out about 23. Next year, 19.6. Still fantastic when you're talking about a company $7-8 billion in sales. So those are some pretty solid numbers to see here for Adobe. If you translate that over to the EPS side, you got 33%, almost 34% EPS growth for the current quarter. Next quarter looks like 19. Current year, 33.8. Next year, 25. So these are still very healthy numbers. Now, why is this a 4? I think this is what I was honestly scratching my head about this, because if you look at this over the last 60 days, you have 5 analysts that have increased their earnings estimate for the current quarter. 4 have done so for next quarter, 6 for the next year, or 6 for the current year, 4 for next year. Only 2 analysts have dropped their estimates, and that was for the next quarter over the last 60 days. Overall effect to the consensus, there hasn't really been much. Our estimates stuck at $1. Next quarter, 107s across the board. Current year number has gone up from 401 to 403. Next year, 502 to 504. So barely budging, barely moving the needle at all. And if you look at the recent surprises, they've been, you know, 8 cents, 7 cents, 4 cents, 3 cents. So decent surprises, but nothing all that spectacular jumping off of the page at you. Let's go ahead and take a look at our chart. See what we got going on here. Pretty steady going all the way back to February of 2016. Here, coming in a little bit late, is a 200-day moving average. I'm pretty sure I could probably extrapolate that down that way. And you'll see couple of retraces to the 200-day met with buying. Since then, it's been the 50-day that has been providing plenty of support. So that 50-day is where you're going to keep an eye on heading into this report. So I'd say support 150 for sure, and then resistance, you've got 52-week highs. So this is a story. Stock just keeps on trucking. Steady growth. Lots of buying. course, this is why we've got the the S&P 500 up at all-time highs. So, been a lot of money coming in this market buying everything that moves. So it hasn't been really violent here for Adobe. You had a little bit of slapping around back and forth last quarter. I think we covered Adobe and we got into that meat grinder a little bit. But after that's smoothed out, you know, you got a little bit of a retrace to the 50-day. But again, shares continuing to go higher. So it's been pretty decent. It's been an okay ride here for Adobe, all right? So again, that 50-day down at 150, I think should provide some downside support should the market get that way. And since we're here at the highs already, you know, that's what you're ticking on for the initial resistance, but that's basically where we're trading at today. So whenever you see these situations where a stock is at 52-week highs heading into earnings report, you better hope that there's no whammies in that report, because then things really go south in a hurry, right? But you'll see here, there's been plenty of times when Adobe gaps up after the earnings report and just keeps on trucking. A lot of this, guys, has to do with these recurring revenue streams. And I think I was looking somewhere where their Creative Cloud, that's the recurring thing I was talking about, something like 39% revenue growth in that segment year over year. So pretty good growth numbers, and that's what's helping boost this thing. It's all about those subscription-based systems, right? All right, let's jump into the G14 classified stuff. I want to dig down on the revenue a little bit better, and you can see this kind of going back. We were at some negative growth here, some contraction in 2013 into 2014. 2015 started turning it around. Should come at no surprise. That's around a time where really started making the push on some of the subscription-based stuff. That's definitely been helping them out recently. And now, again, 23% for 2017, 19.6% this year. So really, since 2015 is when they've turned it on. And that's been evident in that price consensus and EPS surprise chart that we have as well. Now, one thing I do love to look at, guys, you know it, and I might be a little bit rusty here because it's been a little bit. Our consolidated surprise chart here, okay? So what this is going to give me is this is going to give me an idea here about what the reaction has been to earnings, the immediate reaction. Now, of course, we know there hasn't been too much because it's Adobe. It doesn't move as fast. This has been all about that post-earnings drift is what we've seen in a lot of these. So here you've got 2.7% move for last quarter, 4% the quarter before, -2. Here's a big move, 8% move in August of tour, following up on the August quarter in 2016, which is basically where we're at right now here. So mid-September 2016 is really when you had the move, -4%, a 5%, well, almost 6% move. So there hasn't been too many huge moves here. Pretty much every single one of them has been under 9% or so. Here's a 9% move in August of 2013. Okay, so here's a big one, November. So it's been a while, right? It's been a while. But one thing that jumped out on this chart, where are we at? Price consensus EPS surprise chart. It's had a tendency to give us that good old-fashioned post-earnings drift, right? So we don't get an initial big move, but we do get these little drifts. And, of course, this year has been full of lots of nice little drifts upward, okay? So the question, the big money question is the drift going to continue, right? Now, one thing that does give me pause is it is a Zacks rank number 4 sell. But when we look through the data, you'll see that it was a weak sell. I mean, I didn't see a lot of reason why we should be frightened of Adobe. Okay, now let's dig in the options chain a little bit here from our friends at barchart.com. Now these guys are going to report after the bell today, so we can use this front week. Change it from the stack view to the side-by-side view so you get the puts and calls next to each other. 156.97 is where we're trading at right now. That means we can use this 157.50 area as our anchor. Let's look at the calculator. The at-the-money call, trading 270 by 275. We'll call that 273. At-the-money put, 330 by 335. We'll call it Tree for 606 on 157.50. You're talking about a 3.87% move. Not looking for much of a move at all out of shares of Adobe, my friends. Okay. Now, about $6, basically what we're saying with the stock up here. Where did I say that 50-day moving average was? Ding, ding, ding. You got it. That 150 level. So the options market is confirming what our technical chart says, and that is that the 150 level should provide some support to the downsides should things start to unwind here on shares of Adobe. Now, remember guys, I hate getting into this habit of this front week, right? Especially with a stock like Adobe, which has got some drift. So let's go out, look at the October expiration. Change it from the side-by-side to the stack so we can get vertical easy. Now, I do want to point out the first part, which is the obvious part, right? And that was me saying that 150 is support. So that means that you bulls out there have a few options. First, if you're a guy who likes Adobe long run in the long term, right? Likes the subscription model, likes the stock, wants to add, but doesn't necessarily want to pay 157, doesn't really want the risk of this earnings report, thinks there could be some short-term volatility. There's nothing wrong with selling these 150s outright, my friends, okay? If you're a longer-term bull, you could sell these 150 puts outright. Then if the stock drops down below that, stock will get put to you at 150, but hey, at least you're not paying 157.50 for it, right? So of course, then you'd have to buy 100 shares of it, but if you got an extra 15 G's lying around, maybe that's something that you want to do, okay? So there's an idea for you. Here, we're all about putting on the spreads because I know a lot of you guys don't want to mess around with holding these long term, right? So what we're going to do here, for the bulls, you sell the 150 put. But then, since you don't want to get assigned the shares, or you don't want the unlimited downside risk of this, well, I suppose it's not unlimited downside risk, right? It can only go to 0. You're going to buy a put here. So that'll be the other side of your spread. So short a put, and then buy one a little bit further out of the money. So basically, you can use this just to kind of dictate what you want your risk to be. So the further out you go, the more money you're going to have on the table, right? And the closer, the less money you're going to have on the table. So look at it this way. Clear this up. Let's do a 150 and a 148, okay? Now, what does this look like when you do the math? So in this case, you would sell the 150 put. You're going to get 179 for selling that put. Of course, this is an estimate, right, guys? But you get the idea. The bid's 175. The ask is 182. You typically get filled in the middle, so 179. That's what you'd be able to sell this put for. Simultaneously, you buy the 148 to control your downside risk. It's going to cost you, whoops, so 179. It's going to cost you 137 for that 148 put. So your net credit here is going to be 42 cents, okay? Now, the difference in the strike prices here is $2. $2 minus that 42 cents means you're going to have $1.58 at risk. So in this case, you can make 42 on $1.58 or 26.5%. So that's the return that you would get for something like this. Now, a lot of you guys are like, hey, 26%, I got to wait 3 weeks for 26%. I don't really want to, I'm not that patient, right? Then you could go sooner. You could look at the front week or the front month or whatever. Or you could look at the front week. But remember, this 150 area is really where it's a 50-day moving average is, and it's where the immediate sort of move is pricing, okay? So if you believe that that holds, and maybe there's a little bit of short-term volatility, even to the downside for Adobe, maybe there's a little bit of a disappointment, this gives you some cushion while still giving you a chance to make a few bucks, okay? Now, the further down you go with the short side of your put, the less return you're going to get, right, on a spread of equal distance, okay? And the further up, the larger. So you could be more aggressive by saying, no, I think it's going to just go straight up, and then you would sell the 155. You see how much more you can get for that? versus the 150, 250. So the numbers change. But the reason that I'm doing the 150 is because that's the bottom end of where this options market is pricing in, and it happens to be where that 50-day moving average is. Okay, so here we go. So I'm going to say a bull credit trade here is short the October, I believe it's October 20th, 150, 148 put spread for a 42-cent net credit, okay? And I'm going to call this 2-star risk, okay? Now, we were talking about the star system before. The more stars, the more risk, right? Maybe we shouldn't use stars. Maybe we should use like screaming, flaming skulls or something. Or like dynamite, or, you know, Dave faces with my beard on fire. We're going to figure something out that's going to look more entertaining. But for right now, they're just stars. So the grand scheme of your options trading risk, which is inherently very risky to begin with, this is more on the conservative side of things, okay? Because it's an out-of-the-money credit spread, okay? So you don't even need the stock to go up. You just need the stock to not go down more than the options market is pricing in, and you would cash in for a max gain on that. All you need on that is shares of Adobe to stay at or above 150 at expiration, and you'll make out on that one. Now, for the bears out there, it's a little bit different for you guys. Okay? And the reason being, what we're going to have to do is you basically say, remember, 157 where the stock was trading, and $6 is what the options market was pricing in as a move. So that means 163 is the top end of this range. Now, if you notice, you don't have a 163, but you do have a 162.50, which is relatively close. So what you could do from a bearish perspective, if you are in fact bearish, there you go, my eraser works. So the bears could sell this 162.50 call. You're going to get 201 for selling that call. Simultaneously buying the 165, you're going to get back 132. So in this case, you get a 69-cent net credit. But also in this case, the difference in strike prices is 250. Minus at 69 cents that you're taking in premium. That means you have $1.81 that's at risk here. Okay? So 69 divided by 181, you can make 38.1%. So you can make more money on this end here, on this call spread. But the problem is going to be, right, that typically when you get paid more, it means there's more risk. And in this case, of course, there's more risk, right? So here's a bear credit. Short 162.50. 165 call spread for 69-cent net credit, and I'm going to give that a 3-star risk. Well, Dave, why is that 3-star and that's also an out-of-the-money spread? Well, this is closer to the current price, okay? Now you're getting compensated for that, right? But it's closer to the current price than the other one was. Okay, now, Trevor wants to know, hey, can we go short term? Absolutely, you can go shorter term. For sure. And this is how you do that. So, heck, man, you can even look at the front week, and you guys can always construct these on your own. My only suggestion to you is if you are going to do these, use the same price levels. Because the price levels are pretty much independent of time. They don't really care, right? So, in this case, the bulls construct it the same way. So if you look at it this way, and what you'll notice is the numbers are going to be a little bit different. Now here, the 150 put, selling that, you're going to get 80 cents. Simultaneously buying the 148 is going to cost you 50, so 30 cents is going to be your net credit. The amount of money you're going to have at risk is $1.70. That's the $2, the difference in the strike price, minus the 30-cent net credit that you're taking in. So 170 at risk. So here you can only make 17.6%. Now, if you remember, we got a 42-cent net credit the other time. Much bigger number, right? Now, why is that? Oh, I forgot. Nobody else is talking. It's just me. So the reason why that's the case is because you have less time for this to develop. There's less time value in this out of the money put, right? So a lot of this is implied volatility. Just a little bit of it is the time value. So you're not getting the benefit of that added time value for your net credit. So because there's only a few days before this is going to occur, that's what you got. So for a lot of people, though, getting 17% in 3 days is much better than 26% in 3 weeks, right? Or 4 weeks even. So it's just something that you got to weigh out on your own. But this is a shorter term idea. Now, the only reason why I was shying away from more shorter term things with Adobe is here. Because I saw its tendency to sort of move and drift over a several week period. So I just felt like I benefited by going a little bit further out. Just giving the market a chance to go ahead and get to where it's going to go. Okay? So that was my reasoning here on Adobe. But of course, feel free, guys, if you want to. You know I do like doing the credits, right? The credit spreads with just a few days. I love those. I really do. And you could lower your risk, but you're going to lower your return going further in even, right? Like you can go all the way to 146, 145. You're going to make a nickel. You're going to have 95 cents at risk, but you'll make a nickel, but it's just a few day trade, right? So you can explore these further down if you're worried about shares coming down, right? And then the other thing you can do is you can go way far out of the money and do something iron condor style. So what we mean by that is you go, out far on the upside and out far on the downside and sell a spread on either end. I don't know that is the way to go here with Adobe. I think the trade that pays for me is definitely the bull credit on those, using those 150 puts. And really the crux of it comes down to this. It comes down to this 50-day being here. And I see times 1, 2, 3. This is an intraday move, right? Which was defended. 4. So 4 times since May of 2017, the stock's come down and found support at the 50-day and not really made a significant move below the 50-day, save for an intraday move. Which, what are the odds of getting stuck in an intraday move? And that's the day that it expires. Not that good, okay? And then you can even look further. If you go further back in time, you have just a little bit under the 50-day, Of course, this was a much different market than we are in right now, right? Pretty awe-inspiring when you see these moves that some of these stocks have gone on throughout the course of this year, and Adobe no exception. So don't worry, we're going to do a lotto, guys. I'm going to say the trade that pays is the bull credit here. Okay, so that's the one that I'll be keeping track of. And then before I leave you, so what's the lotto? The lotto is the 5-star risk trade that we look at. That's literally, what if? This is like the big what if. So what if Adobe has a huge report, breaks out to the upside on some significant volume? What should I be looking at, right? I don't think you should do that Friday. If you just go one more week out, maybe a 165 or a 167. So that would represent a significant leap. Now look here. A couple quarters ago, we got a jump from 121 to 130. So that was 7 on 123. So 5.6% times the stock's at what, 157 right now. It's another $9. So that puts us 166 basically. So I think that's what you should look at if you want to be really aggressive. The 165 call. But again, guys, when we're getting these, when these stocks are like this and they're getting all the way up $155, $157, it makes these trades prohibitive, you know, because it really takes a huge move for you to benefit in something like this. Okay. All right. So there we go, guys. So I think a lotto, you got to go all the way into 165s. I would mess with a higher beta stock than Adobe for the lotto, right? It's just not high beta enough for me as far as I'm concerned. So I would avoid it, but if you want to do it, go ahead. And that's all we got. All right, so we got a game plan for Adobe. Tomorrow, we're going to be talking about the Fed. What we should look at with the Fed. What's a good idea for how to trade the Fed. And we're going to step outside of the box, guys. We're not just going to talk about stocks. We're going to look at some Forex stuff. I know David's going to like that. Hopefully he'll be able to join us tomorrow as we've talked about some of these yen trades in our chat room. You know, I've put some on too. Of course, one of them blew up in my face, but just the nature of the beast, man. Since this hurricane, I think I've had 4 or 5 losers in a row, and I think I've had 6 out of my last 7 have gone against me. So it's has not been so fantastico for your boy, but that's all right. Just got the timing off a little bit. C'est la vie, man. Make money, spend money, make more money, right, gents? All right, so thank you guys so much for hanging out with me here on the new, always free Zach's Live Trader. I will see you guys in the chat room, and there he is. And I will see the rest of you guys in the chat, and then tomorrow I think I'm gonna have to make it 10 a.m. Central though. Okay, so keep an eye out for that. It might be 10 a.m. Central. All right, guys. I will see you all mañana and later today. Have a good one.